Imagine this. A massive power plant suddenly has a catastrophic failure. A key piece of machinery just breaks. The whole plant has to shut down for over a year. So the owners file a huge insurance claim. We're talking over 166 crore rupees. You'd think that's what insurance is for, right? Well, what happened next wasn't a quick payout. It was the start of a legal war that would drag on for 22 years. This is that story. Okay, so here's how we're going to break this down. We'll start with the initial accident, then dig into why this massive claim was shot down. We'll follow the case through the courts, see the final showdown in the appeal, and really unpack the final verdict to see why, at the end of the day, solid proof is everything. All right, first up, a billion rupee breakdown. Let's set the scene and talk about the incident and the absolutely massive claim at the heart of this whole thing. So this is the number that started it all. 166 crores 88 lakhs 71,981 rupees. That was the total amount claimed by Spectrum Power Generation. And it wasn't just for the broken equipment. The really big piece was for all the profits they lost while their plant was completely out of commission. And this timeline, wow, it really puts that 22-year battle into perspective. Think about it. The failure happens in 2002, but the insurance company doesn't even officially say no for almost 3 years. Then, the first court verdict doesn't land until 2021. And the final decision? Not until January 2025. Just an incredible amount of time. So this brings us to the big question, right? Spectrum had what's called an industrial all-risk policy. I mean, that sounds like it covers pretty much everything. So why on earth did the insurer just flat out refuse to pay? Okay, to really get to the heart of this, you have to understand this one term: business interruption loss. You see, most of that 166 crore rupee claim, it wasn't for the machine itself. It was for this. It's insurance that's supposed to cover all the money a company would have earned if the accident hadn't happened. And this, right here, became the central battlefield for the entire case. And here you can see exactly where the two sides drew a line in the sand. Spectrum's argument was pretty simple. Hey, our all-risk policy covers the physical damage, and it should obviously cover the business losses that came from it. But the insurer fired right back, saying, not so fast. We believe the damage was caused by your contractor's willful negligence, and that is something our policy specifically says we do not cover. So, after years of arguing, the case finally landed in court. But when the verdict came down in 2021, it was this weird split decision that honestly left nobody happy and pretty much guaranteed this was going to the next level. So check this out. The court basically split the claim into two parts. For the physical damage, the actual broken turbine, they sided with Spectrum, giving them almost 18 crore rupees. But for the much bigger part of the claim, that 100 plus crore for business interruption, the court gave a hard no, completely denied. And the court's reason for denying it? Man, it was brutally simple. They basically said that Spectrum had totally failed to prove its loss. They just didn't bring the receipts, you know? There was no real evidence to back up that giant number for lost profits. And that's the key difference. A claim is just you saying you lost something. Proof is what makes a court believe you. And that, of course, brings us to the appeal, the final showdown. I mean, you can't blame them. Unwilling to just let go of over 100 crore rupees, Spectrum took the fight to a higher court for one last shot. In the appeal, the arguments got laser-focused. Spectrum was basically arguing from a position of logic. They were like, come on, you already agreed the machine broke. It's just common sense that we lost a ton of business because of that shutdown. But the insurer, they just dug in their heels on the evidence. They said, look, common sense doesn't cut it in court. The burden of proof is on you. Show us the official documents, the tax filings, the audited reports that prove you lost that exact amount. And so, in January of 2025, after 22 long years, the final verdict was handed down. And it really served as a masterclass for anyone in a high-stakes dispute about the absolute, non-negotiable power of real evidence. The decision was crystal clear. Appeal dismissed. The court sided 100% with the insurer and the original trial court. Spectrum would not be getting a single rupee of that 100-plus crore claim for business interruption. The 22-year battle was officially over. So why did the court make this call? Well, their reasoning followed this really clear, logical path. First, they just reaffirmed that, yep, the burden of proof was entirely on Spectrum. Second, they looked at the evidence Spectrum did provide, some calculation sheets, and found it was super weak and totally unverified.
Third, they pointed out the complete absence of official financial documents, and that led to their final point. Without credible proof, a claim is just a number on a piece of paper, not a legal fact. And if you want to know specifically what the court found so unconvincing, well, here it is. We're talking about unsigned tables, documents where nobody knew who even made them, and financial claims where it wasn't even clear if the numbers were in lakhs or crores. This just wasn't the kind of hard, verifiable data you need to justify a billion-rupee payout. So, after 22 years, what does this all boil down to? It's a really powerful lesson in a simple distinction. A claim is just a story. It's the story you tell about what you think you lost. But proof? Proof is the verifiable, credible evidence that makes a court actually believe your story. In this massive, decade-spanning battle, Spectrum had a big story, but in the end, they just never delivered the proof.